This is the demonstration for Chapter 1, and what I want to do is go through a few things in Chapter 1 that are important. Normally I would not do this with you. I expect all of you to just go ahead and read the chapters, and that's your responsibility before we start our next demos as we go through. So a few things I just want to talk about. The first item is the definition of accounting. This is on page 3 in the book. Accounting is an information and measurement system that identifies, records, and communicates an organization's business activities. So that's what we're going to be doing. We're going to have transactions and events that happen. We will record them, and then we will communicate by preparing financials. We'll analyze the information, interpret it, and make some decisions. A lot of people call accounting record keeping or bookkeeping. But basically it's all the same thing of identifying, recording, and communicating business activities. On page 4, you're going to want to go back here and kind of look at these internal and external users of accounting. This is one of the exercises that you will do for your homework in this chapter. But external users do not directly run the company, but they do need our information to make decisions. Like if we want to get a loan, or if we're investing into a company, or if we're going to extend credit, if a company's going to extend credit to our business, then we want to make sure that, that we have good financials that they feel comfortable. The other item is the internal users, and these directly manage the organization, so the accounting information is needed all the time. So like with HR, you're going to look at the budget and maybe talk with the financial department, the accounting department, and see, do we have money in our budget to increase payroll or hire new employees? Do we need to find a different way of distributing our goods and services? So, that's something that we all talk about. There are lots and lots of opportunities in accounting. This is at the bottom of page 4. And you can work in financial, managerial, taxation, or any other accounting related areas. There's private accounting, where you would work for a company. Public accounting is where you work for a firm and you do accounting for other companies. So you could work for a nonprofit organization. You could work for a government agency like a school. You could work for a hospital, a sports team, anything like that. And they would, you would do the accounting for that company. Some people even go into law enforcement, or they are law enforcement, and then they go into forensics accounting and look for embezzlement, or they'll work with identity theft, or when there's a security breach and things like that. So there's lots of opportunities in accounting. It's not just boring. It's very good. On the top of page 5, these are the different opportunities in accounting. Here you'll see here that there's accounting related. You could work for a financial institution, and they're ones that never go away. Our financial institutions have been around for a very long time. Again, there's just a lot of different areas that you have opportunities to work in accounting. Okay, so we're going to start with our Chapter 1 demonstration, and you should have printed this out from your Canvas module, Chapter 1. We're going to be working with Sylvia Workman. She's the owner of a hair cutting business called Expressions. So we're going to work with these transactions, and this is the information spot that we're going to be putting that in, called the accounting equation. Before we start that though, I do want to kind of go over a couple items that are important for Chapter 1 and kind of the basics for our whole accounting work that we're going to be doing. We're going to be working with assets, and assets are things that we own. That can be cash, supplies that we need for our company, building, equipment. It can be our accounts receivable, because those are people that we might let buy on credit and then they're going to pay us back later. And then eventually we'll get into like prepaid insurance and prepaid rent and things like that. We also have liabilities. Liabilities are things that we owe. So liabilities we owe, assets we own. So liabilities could be accounts payable. We owe a company money, and so we're going to pay them later for items that we get. Or we might take out a loan, and that's a notes payable, and that's going to be, like a loan from our financial institution to pay for maybe a piece of equipment or a vehicle. And then we have equity, which is the owner's stake in the company or everything that's left over. So those are our three categories: assets we own, liabilities we owe, and then we have our equity. Now with assets, we can sell our assets. We can sell the furniture that we have and get money for it. We can sell our building and get money for it. We can sell the supplies that we have and get money for them. So our accounting equation always has to balance. So assets equal liabilities plus equity. So for an example, like I said, it always has to balance. Left has to equal right. Let's say I have $10,000 in assets, $5,000 in liabilities. My equity should be $5,000. So $10,000 equals $10,000. Let's say that I have $10,000 in liabilities and $2,000 in equity. I should have $12,000 in assets. Again, the left has to equal the right. So we'll be working on that as we go through. You'll have a couple activities that will work with that too. But that's going to bring us to our demonstration here. And with that, you'll see the accounting equation up at the top. Assets equal liabilities plus equity. Our assets are cash, accounts receivable, furniture, and store equipment. That's for expressions. Notes payables are liability. And then we have capital, drawing, revenue, and expenses under equity. And I'll explain those as we go. Now, we're going to start with the first transaction where Workman invests $3,000 cash and $15,000 of equipment in expressions. So we're going to start with letter A. If you'll put a letter A at the top of the box, stay up towards the top. When our owner invests money into the company, we're going to add to our cash $3,000, and then we're going to add to our our equipment $15,000, and because we have cash and equipment, and then the total of these two is what the owner's investing, and that's going to be $18,000. So capital is for investment. So when the owner makes an investment, whether it's cash and equipment or cash and something else, or just an item like a vehicle or something like that, then that's an investment, and so we have to record that. I'm going to put my pencil in the middle where the equal sign is. We're going to add up the left. 3,000 plus 15,000 is 18,000. Does that equal the right side? Yes. So 18,000 equals 18,000. Again, we always want the left and the right to equal. I'm going to cross this off because we always want to cross off transactions as we go so that we know that we got that one done. Now, on August 2nd, Expressions paid $600 cash for furniture for the shop. So in this case, we're going to pay out money. When we pay out money, that's a subtraction to our cash. Then, what did we get for our cash? We got furniture. So in that same box, put letter B. And we're going to subtract from our cash $6,000. And again, what did we get for our cash? Furniture. So we're going to add $600 to our furniture. All right, now here we're going to draw a line across all of our boxes here. And you're going to want to make sure that you do have a calculator for working with accounting. 3,000 minus 600 is 2,400 in cash, 600 in furniture, 15,000 in equipment, and 18,000 in capital. I'm going to put my pencil in the middle at the equal sign here. 2,400 plus 600 plus 15,000. Add those up. That equals 18,000. Other side, 18,000. So we're still equal. 18,000 equals 18,000. All right, I'm going to cross off letter B. Now letter C gets its own box. So we're going to pay $500 cash for rent. So for letter C, we're going to subtract out 500 because we paid cash. If you know that you paid cash, you're always going to subtract from cash. Now, what did we get for our $500? We paid for rent for a month. So in our expenses, we're going to put 500 and we're going to label this rent. So we have 500 and we're going to label that rent. Now, with that, now we have to run our balances again. Now, expenses for our company, because we have to spend some money to make money. We just can't have our salon out on the corner with a cardboard box because we can't, if it rains, then you're going to have soggy cardboard. If you're given a perm, you definitely can't do that out in the rain, snow, or anything else. So when we have expenses, it could be rent, postage, advertising, when we pay people, their wages, any kind of expenses are going to fall in our expense column. So sometimes we have to spend money to be able to keep our company running. All right, so let's draw our line across. You don't have to have a ruler. All right, so where are we at with our cash? We have $2,400, and we're going to subtract out 500. So we're at $1,900 in cash, $600 in furniture, $15,000 in store equipment, $18,000 in capital, and we have $500 for expenses. Now, I'm again put my pencil here in the middle. $1,900 plus $600 plus $15,000. So that's where we're at with the left side, adding those together. And then, so that's going to be $17,500, right? Yeah. 17,500. Then we're going to have on our right side, we have to follow what it says up here. So we're going to take capital minus expenses because we haven't written anything else here. So 18,000 minus 500, that gives us 17,500. So our left still equals our right at 17,500. We'll cross off letter C and we'll move on to letter D. Now, for this one, we purchased $1,200 of equipment on credit for our shop using a long-term note payable. So maybe we needed a new shampoo bowl, or we needed a new chair for pedicures. So we're going to purchase a piece of equipment. There's no cash in that sentence. No cash at all in that sentence. So we're not going to use cash at all. So this is letter D. We're going to purchase equipment. So we're going to add to our equipment $1,200. And then how did we pay for it? Well, we didn't pay cash for it. So we're going to use a long-term note payable. That's our liability, is a note payable. So we're going to add to our note payable. Now we owe money, $1,200. All right, so again, we bought equipment, we added the equipment, and now we owe money because we didn't pay cash for that right up front. We're going to draw our line across, and we have $1,900 in cash, $600 in furniture. We now have $16,200 in store equipment. We owe $1,200 on our note payable, $18,000 for capital, and $500 for expenses. Now again, don't be afraid to use your calculator. So I'll get out my calculator here. 1,900 plus 600 plus 16,200 is 18,700. On our other side here, I'll put my pencil here. We have 1,200 plus 18,000 minus 500, and we're at 18,700. So our left still equals our right, and we're still doing fine with all of that. Okay, I'm going to cross this off. On August 5th, expressions open for business. Cash received from services provided in the first week and a half of business ended August 15th is $825. So we had people come in, they got pedicures, manicures, perms, they got hair braided, Maybe they got a color, maybe they got some extensions, maybe they got an eyebrow wax, lashes put on, whatever. We had cash received from services of $825. This is letter E in the next box down. And this is going to be cash received, so we're going to add to our cash $825. Now this is services, because remember that we're going to be working for the first half of our class with service businesses. So that's going to fall under revenue. So we're going to add to the revenue $825, because those people came in, got their work done to them, we provided the service, and then they gave us money for it. All right, so with that, we're going to draw our line across, and we're going to take our $1,900 and add $825, so we're at $2,725 in cash, $600 for furniture, $16,200 for store equipment. We still owe $1,200 for our note, $18,000 for capital. Now we have $825 in revenue and $500 still in expenses. Now again, I'm going to put my pencil here in the middle. So $2,725 plus $600 plus $16,200. We're at $19,525. Again, we have to follow our operations up here at the top. So $1,200 plus $18,000 plus $825 in revenue minus $500 in expenses gives us $19,525. So our left and right are still equaling. We're still good. Okay, letter F. We had a customer come in. We provided $100 of hair cutting services on account for them, but they didn't bring their wallet. So this customer is probably one of our very, very good customers. And we said, you know, you can go ahead and you can have the service done for you today, and you can come in a couple days and pay for it. You're a customer of mine from when I worked somewhere before, and so I know that you will pay, even though this is a brand new company. We know that you will pay. So this is letter F. No cash exchanged hands between Sylvia and the customer. So this is going to be accounts receivable. So we're going to add to accounts receivable. So this is where our customer did not have their money, but we're going to go ahead and add that $100 to the accounts receivable, and they'll pay us later. This is still considered revenue because we provided the service, even though cash did not exchange hands. So we're going to add $100 to our revenue account, and that person will come and pay later, hopefully. Hopefully they will. All right, let's draw our line across. $2,725 for cash, $100 for accounts receivable, $600 for furniture, and $16,200 for store equipment. Remember again that accounts receivable is an asset, because if we told the customer don't come and pay us for about 30 days, then we could call them up early and say, hey, I'm a little short on money, can you come and pay it? So that's why it's an asset. Notes payable is $1,200, $18,000 in capital. Now we're at revenue of $925 and $500 for expenses. One thing I did forget to mention when we started is please make sure that you're doing all of your accounting in pencil. Make sure you're doing all of your accounting in pencil. It makes it a lot easier to erase, like I did up here with my $1,200. Make sure that you use pencil. Okay, so again, if I put my pencil there, $2,725 plus $100 plus $600 plus $16,200 is $19,625. I'm going to take my note plus my capital plus my revenue and subtract my expenses, and I get the same $19,625. It's important that you balance out after each line, after each transaction, because if you made a mistake up here and you're all the way down at the bottom, that's where you're going to have to do a lot of erasing. So it's best if you balance this out as you're doing your homework. If your accounting work and your problem isn't working and you don't balance out, let's say at letter F, you can send me a picture of this and I can tell you, oh, I see where it is, fix this, and then you'll balance out. So make sure if you're not balancing and you can't figure it out that you do let me know. That's what I'm here for. Okay, letter G, on the 17th, we received a $100 check for services previously rendered on account. So what that means is that customer that we did the service for, and let them come back and pay later, they actually paid us the money. So a check was given to us. So this is letter G. So we will add to our cash 100. And we're going to subtract from accounts receivable 100 because the customer is giving us money for what they owed us. You don't want to add that in because then it's going to make it look like they owe more than what they really do. Nothing else was affected, but we're going to draw our line across here. $28.25 for our cash, 0 for accounts receivable, $600 for furniture, $16,200 for equipment, $1,200 for the note, $18,000 for capital, $925 for expenses. $925 for revenue, and $500 for expenses. We'll add up the left, $28.25 plus $600 plus $16,200 is $19,625. We take the note plus the capital plus the revenue minus the expenses, and we're still at the same $19,625. All right, now we paid $125 cash to an assistant for working during the grand opening, and so this is going to be money that we will spend. A lot of people don't like to work for free, so we do want to make sure that we pay the employees. All right, so this is letter H. We're going to pay cash minus $125 to cash, and anytime that we're paying our employees to work for us, that's an expense. So this is going to be adding all of our expenses together. So we're going to add $125 to our expenses, okay? Now, what again we're doing in this column is keeping track of all of our expenses. We still subtract the total from the overall other numbers here, but we're just keeping track of all of our expenses. So we draw our line across. $2,700 is the cash, 0 for accounts receivable, $600 for furniture, $16,200 for equipment, $1,200 for the note, $18,000 for capital, $925 for revenue, and now our expenses are at $625. And I forgot to label this. What we want to do is put wages here for our $125. I forgot to label that. Makes it easier when we get to our financials in a few minutes. Okay, again, we're going to add up the left and add up the right. So the left, $2,700 plus $600 plus $16,200 gives us $19,500. $1,200 plus $18,000 plus $925 minus $625, that's going to give us the same at $19,500. All right. Now, letter I, that's going to look just like letter E. Cash received from services provided during the second half of August is $930. So we have letter I, and that's going to look just like letter E. So we will add $930 to our cash and $930 to our revenue. Again, people came in and had the service provided for them at the hair salon, and we took in the money, and that is our service or revenue all added together. We will draw a line across. All right, so cash, $2,700 plus $930, we're at $36,630. 0 for accounts receivable, $600 for furniture, $16,200 for our equipment, $1,200 for our note, $18,000 for the capital. Now with the revenue, we're adding both of those together. We're at $1,855 and $625 for our expenses. Again, we're going to I'll do the right side this time. We're going to take the $1,200 note plus $18,000 in capital plus $1,855 in revenue, and I did that wrong. $1,200 plus $18,000 plus $1,855 minus $625 for the expense. We're at $20,430. I'll check the other side. So we have the cash plus the furniture plus the store equipment. And we're at $20,430. So we're all balanced out. $20,430 left equals the right. Okay, I'm going to cross off letter I, letter J. Now, we're going to go ahead and pay $400 towards the principal on our note payable. So, we owe $1,200. That was up here from the August 4th or letter D. And now we're going to pay $400 towards that. So, again, remember when we pay cash, that subtracts from our cash. So, this is letter J. We're going to subtract out $400. And then the other half's going to go in our note payable. We're going to subtract $400 from our note payable. Again, you don't want to add that because then it's going to look like we owe more than what we do. Alright, so what do we have left in cash? $3,230. 0 in accounts receivable. $600 in furniture. $16,200 in equipment. Now on that note, we only owe $800. $18,000 in capital, $1,855 in revenue, and $625 in expenses. Okay, so again, $3,230 plus $600 plus $16,200. We add those up, and then we have $800 plus $18,000 plus $1,855 minus $625. So we want to make sure that we check the left and check the right. And we should be at $20,030. Yep, $20,030, 20030. All right, last transaction. Our owner is making a $900 cash withdrawal for personal use. This is a totally legit transaction for a company as long as we keep a paper trail. So when the owner's investing into their company, they can start taking that money back out anytime that they want to. So we call that a withdrawal or a drawing. So this is when the owner is going to withdraw from the company the money that they have put into their company. So again, we want to keep a paper trail, so we'll write a check for that. And so for the last transaction here, letter K, we're going to subtract $900 from the cash, and then the other half is going to go to our drawing. Sorry, we're going to put a minus here because that's going to be a subtraction. And again, what we'll do in that drawing column is keep track of all of the owner withdrawals, because they could withdraw 1, 2, 3, 4, 5, 6, 7 many times during the month. So we'll just keep track of that all in our withdrawal or drawing column, just like we did the expenses, just like we do the capital, just like we do the revenue. So we keep track of all of those in there. Draw our line across one last time here. And we have $2,330 left in cash, 0 for accounts receivable, $600 furniture, $16,200 for equipment, $800 for the note, $18,000 for capital, $900 for drawing, $1,855 in revenue, and $625 for expenses. Now again, I'm going to add up the left side, 2,330, 600, and 16,200, and I get 19,130. I'm going to take my 800 plus my 18,000 minus 900. Oops, I put you in the wrong numbers here. minus 900 plus 1855 minus 625, and I get the same number here, 19,130. Now if you went through this whole entire list of transactions and put them into your counting equation and you didn't balance down here at the bottom, you're going to need to go back through and see where you made your mistake. That's why it's best you go line by line by line. Or again, you can send me a picture of this and then I can help you figure out what happened here. So again, you want the left to equal the right, and make sure you go line by line to do that with. Alright, so that's the first half of our demonstration, learning the actual accounting transaction.